Hello everybody, so this video is entitled Bitcoin, MSTR, Solana, Hyperliquid, Silver and Copper. I want to talk about next-gen commodities. Well, I guess silver and copper are older ones, but to be used in the next-gen revolution of AI. And of course, I believe things like Solana, things like Bitcoin will greatly benefit from AI. And I want to talk about the proxies to access them. What stock proxy can you use? Because not everybody is comfortable with a Trezor wallet or a Ledger wallet. Not everybody's comfortable with that. And so, of course, why do I talk about commodities? Why do I talk about all of this and not just stocks that are pure fiat derivatives, pure dollar derivatives, trying to grow a top line in order to outpace money growth? That's what stocks do. That's why I want my stocks to grow more than 30% a year top line, because I believe it's the only way they'll outpace the growth in money supply. Now, when you buy commodities, you don't have to do anything really, but just hold them and let the money supply do its devaluation. And of course, on this channel, historically, I've shown, it's now outdated, I need to update that chart, but I've historically shown a M2 chart overlaid with a euro-dollar chart. And then you add the two, and you get to see the money growth, how much more money is in the system every year. And per my estimate, it's about 15% more. It's about 15% more, because you have to realize that M2 is only the money created within the US banking system. And there's thousands of commercial banks, and it's an estimate, and it's not a good one. There's a lot of academic papers talking about M2 not being a very good estimate. And of course, Eurodollars is just fancy old world now to talk about money created abroad by foreign banks that make their way to the US back with trade. They make their way back with trade. We have absolutely no control over this, and we don't know it, and we don't know of it. So there's no accurate count of how much dollars there are, but in my view, it grows probably about 15% a year, 15% more dollars each year. And so if a commodity doesn't grow and stays the same value, and it doesn't grow by 15% a year, it should beat the denominator. And the denominator is, of course, the money supply, that ever-growing money supply that cannot stop growing because of the mountain of debt we live in. And so this is why I love Bitcoin, and this is why I love strategy. I've said before that I think strategy should just do nothing, sit this one out, wait for the third storm to stop, because there's been a 10x increase in the FUD from one particular YouTuber, but not just that. Of course, X has been getting worse on X, and now they're attacking personalities in the Bitcoin Treasury space. Well, quote unquote, right? We're not Kim Kardashian or whatever, but you know what I mean, like quote unquote personalities. Like when you start attacking people. Anyways, the point I'm trying to say is there's a lot of tribalism. There's a lot of different clans that hate each other, and that hurts the asset, and they don't work together. And so that's the reason why strategy is not doing well today. Strategy should not be down this much today. We should be down a little bit, right? 2.5% roughly we should be down, not nearly 5%. At one point earlier. MNAV, unfortunately, is compressing, and I think that's because of the social effect, the negative social effect from engagement farming, because whenever you put strategy in a video, everybody watches it, because it's the most quote-unquote interesting stock that people like to hate on and love on, and so that attracts a lot of bears, and that's unfortunate. And by the way, Stretch, you should not read too much into the drop today for Stretch, because we just were ex-dividend yesterday, so one should not read too much into the Stretch drop today. It will take time to get back to 100. We'll get back to 100. We just need this third storm to go away, and the third storm, unfortunately, is alive and well against MSTR right now, And I guess that's because a lot of the Bitcoin maxis, they found a new asset to hate, because really the reason why MSTR is not doing well is because Bitcoin is not doing well. But I guess they need to find a new target, and MSTR provides much more meat for engagement farming than Bitcoin itself does. There's maxis, you have grown-up acting like babies, you have degens, you have perma-bears, you have all sorts of people who opine on the asset, on MSTR, on BTC, and make nonsensical statements, start creating words like suit coiners, and just throw a lot of shade, a lot of FUD, fear, uncertainty, and doubt at the asset. And so that's how you see this is not a mature asset class. This is not a mature asset class just yet. But in my view, the fundamentals of the protocol are as sound as ever. 21 million coins, never a single more. It's the hardest money, and it's one of the only monies that you can actually self-custody with a string of 12 words in your brain. You can just remember 12 words, and you can self-custody it. You don't have to defend self-custody Bitcoin that's in your brain. It's not like gold where you would have to defend it if someone tries to take it from you. You don't have to worry about that with Bitcoin. You don't even have to tell anybody that you have Bitcoin. It's pseudonymous. There's a lot of tremendous advantages to self-custody Bitcoin, and that's what the maxis have against strategy. They don't like strategy because the maxis would like to have everybody be a maxi. The maxis are kind of like the preppers of the investing world in a way. And I fundamentally believe that owning the real thing is important. But I think for most people, it makes sense to have a bag in a broker, a big bag in a broker. And that's where things like MSTR comes in. That's where fears like stocks like MSTR comes in. That's where stocks like HYPE comes in. Right, and of course, if Bitcoin Treasury didn't exist, perhaps the maxis would go after HYPE and FBTC and all of the other Wall Street entry into the custody business. So self-custody is very unique, but it's not for everybody. Not everybody's okay with a ledger wallet. Most people like to just deal with their broker, especially if you live in the West and you trust your broker. But of course, I think everybody should always have some self-custody Bitcoin. And of course, the big influencer on strategy and other BTC Treasury companies who's getting flooded right now all over the internet. You can see he's made many videos about self-custody. I just don't understand why this influencer is going after MSTR. I just don't get it. And I used to like him. I used to like the guy. Anyways, if you don't like the drama, which frankly I'm beginning to not like it at all. This is hopefully this doesn't turn like a whole Middle East situation at all, because I wasn't interested in that, and frankly I'm not going to be interested if this whole drama keeps going on of personalities attacking other personalities. Anyways, if you don't like that, may I suggest you take a look at what some people have started calling revenue coins, what Saylor has called staking networks, in a favorable way. Saylor has talked about those in a much more favorable way in the past year and a half. One could call them Bitcoin adjacents. They're next generation blockchains. They're the newer blockchains. They're the evolution of Bitcoin. But of course, Bitcoin decided, after the blockchain wars, it was decided that Bitcoin would stop its evolution and Bitcoin would freeze and stay just money. So Bitcoin have evolved, blockchains have evolved beyond Bitcoin to enable smart contracts and to enable the building of the next generation internet. And of course, I believe a big part of the future is going to be companies operating in the blockchain, companies being entirely on the blockchain, everything entirely run on a blockchain. And so you could have a situation where it's really not WhatsApp, it's Solana chat, and Solana chat entirely lives on the blockchain, and while WhatsApp lives in Facebook and it lives in a stock. That's kind of a fundamental difference. And I would argue that there's a lot of people who dislike these other layer ones other than Bitcoin, but they are channeling their dislike towards ETH. ETH is getting a whole lot of the dislike. ETH is getting it. ETH is sort of a punching bag for maxis and the like. It's getting the dislike. And they tend to ignore these other chains. These newer chains tend to be ignored. So I was gonna make a joke about Cardano, but if you're ignored, you're more steady-heady and you trade more on the fundamentals. And so I like that. Because frankly, there's no strong opinions about Solana or about HYPE, at least not as strong as they are about ETH. And I like that very much about these assets. So what are these revenue chains? What are these newer chains? They're chains where anybody can come and build, any developer can come and build whatever they want. And it turns out most of what they've built are rails for stable coins, decentralized apps of all sorts, and decentralized exchanges. Decentralized exchanges, of course, being some of the most successful uses out there for this blockchain. And the key to Solana and to HYPE is the idea that whenever you build something on it or whenever you transact on it, you have to pay a fee. And these tokens are the oil to make the blockchain create, transact, to build something. You gotta use the oil of the network. And so the Solana coin is the oil of the Solana blockchain. And the key thing about these tokens is the tokenomics. Solana burns 50% of the fees that it earns. So the fee makes up the revenue of the chain, and whenever the fee is earned, half of it is burnt, making the token more valuable. I compare this a lot to Apple stock. This is very similar to Apple stock. If you look at the performance of Apple stock, much of it is due to buybacks. Buybacks is just a TradFi way of saying burning the tokens. That's what Solana does. They burn their old tokens, and it increases their prices. And of course, Solana, they have a lot of very successful apps, including Jupiter, including all sorts of other apps. They are gaining a lot of momentum with USDC. It's a very successful blockchain, and this creates buying pressure. 50% of the fees earned by the protocol create buying pressure on the token. Unfortunately, the token is still very correlated to Bitcoin, and it's still extremely down. Unbelievable that this token dropped to near $60. Unbelievable. And of course, because this is depressed, because nobody pays attention to this, you have the proxies who are even worse. The proxies, like Forward Industries, are trading at a 0.7 MNAV per their website. So these are trading at an even steeper discount. This is a forgotten asset, but this is a deflationary asset. And I don't want to invest in HYPE, right? I don't want to buy SpaceX right now. Did you see SpaceX? It keeps going up. It's too much. It's too expensive. I want to buy cheap stuff. This is cheap stuff. And it's not broken cheap stuff. There's actually a lot of things going on under the hood. Moving on to HYPE. Hyperliquid, HYPE. So, of course, more out on the risk curve, although that's arguable. What I like the most about HYPE, is my main reason for liking HYPE, is that HYPE is a very generous token. It burns 99% of its fees. 99% of its fees, mostly the trading fees, are being burnt. And you can't deny when you look at the chart of Hyperliquid, Hyperliquid is pretty much at an all-time high when most cryptos are at a multi-year low. Hyperliquid is at an all-time high. And I would argue all of this has to do with the fact that they burn 99% of their fees. And the Hyperliquid protocol, the DEX on Hyperliquid, is extremely popular. You may remember the whole silver craze. A lot of people placing trades on silver and Hyperliquid. Hyperliquid, in my read of the situation, is making quite a bit of money with the SpaceX synthetics and the SpaceX perps. You can already buy a lot of assets with a lot of leverage on the Hyperliquid platform. A lot of stocks with very high leverage, like the younger folks enjoy, like the degens enjoy. You can do that on Hyperliquid, where you can't do that in a broker. Your margin is a joke compared to what a protocol like Hyperliquid gives you, and a lot of degens, a lot of gamblers like to go on Hyperliquid and do a 5x on some stocks. Or, as the CEO of PER here of Hyperliquid Strategies says, you can trade Birkin bags on Hyperliquid. Apparently, I don't know. That's what I heard him say in an interview. My proxy for Hyperliquid is PER, PURR. I find the CEO stellar. I recommend you watch any interview from the CEO of this company. Absolutely stellar. Quite a strong understanding of the company, of the token, and half of what it could be from Wall Street. It's for Wall Street. It's important to note that HYPE well, it was created by guys from Harvard, but they operate in Singapore because it's not regulated in the US, and it's for that reason it's tough to get access to it in the US, but they are taking the world by storm by being located in Asia and via their location in Singapore. I will note that you can see MNAV. So what's the MNAV here? You can see there's debates about MNAV everywhere. Same here, 1.15 versus 1.02. So what's the MNAV here? Do we know what? I would tend to believe that's the one with taxability. That's 1.02. Either way, you're trading roughly at the price of the asset. It's not a big premium, even if it's 1.15. It's not a big premium whatsoever for having a highly bankable security on a traditional broker. So I would argue I like PER much more here than the pure form token. In fact, I like the DATs more than pure form for a lot of these assets, except for Bitcoin. For Bitcoin, I still believe custody is so important for Bitcoin. I believe custody for Bitcoin, having some share of your Bitcoin bag in custody, in self-custody, I believe that's important. That's what we all do, by the way. I watch a lot of strategy influencers. Not that I put myself in that bucket, I don't, but I watched a lot of these strategy influencers, and they all have some use case for Bitcoin pure form. Bitcoin pure form is important. Anyways, what I don't believe self-custody is that important is surprisingly what a lot of people do. Have you heard of stacking metals? So you have YouTube channels dedicated to stacking silver coins, and they do copper coins now, and copper ingots and copper bullion, and they just stack it. And they do YouTube videos filming themselves, looking at their stack, counting their stack. Very funny, if you ask me. But also very risky from the standpoint of theft, especially if you put it on YouTube. People may look out of your window. Maybe you have a camera angle off, and they may see your stash. So to me, this is absolutely not secure. And I would find that buying silver via a trust, like the iShares Silver Trust, would be much more secure. At least that's what I would think. Let's talk about a little bit two of those. So silver and copper, a boring old world way to beat the money supply? ? I believe this very much could be a boring old world way to use a commodity to beat the inevitable print of the money supply. And just like blockchains and just like Bitcoin, I believe silver and copper will benefit greatly from AI. You may ask, why not gold? Well, frankly, on the surface of it, gold should very much benefit from money printing. But the problem, in my view, is that gold is very macro and central bank driven. And just like some crypto projects, sometimes you have a huge unlock and somebody unloads a bunch of tokens. Gold, it's the central banks who do the huge unlock, and sometimes the central bank could just decide to sell it all, and they sell it all, then you make everything crash. If you look at the current gold price, I don't follow gold too closely, but from what I understand, there's a bunch of people there's a bunch of sales from Turkey and from China that they did to prop up their currencies, especially Turkey, from what I understand, and that made gold crash. Gold is too macro, gold is too central bank driven for me. I do not believe that is the case for silver and copper. I think silver and copper are much purer plays on AI, and they're plays where you don't have to pick a winner. Because I wouldn't be able to tell you. I mean, to me, Nvidia's clearly gonna win and win a lot with AI. But aside from Nvidia, like I have a hard time telling you between Micron and SK Hynix, or Western Digital. I have a hard time to tell you who's gonna be winning a few years from now, and where the market will rotate. But I know one thing. I think they'll all need silver and copper. They will all need silver and copper. Of course, you need silver for a few things related to AI. One of them is the circuit boards and the circuitry. Very important for that. Another one, of course, for silver is next-gen batteries, next-gen transformers, next-gen high-voltage application. Silver is used across the board in all of this. I have a quick conversation with an AI about this. It's very, very, very much used, and it's going to be in high demand for anything that has to do with robotics. And there is a shortage of silver, per what I understand. Silver ran to nearly 120 in January of last year. Hyperliquid, by the way, made a bunch of fees on that, which made the Hyperliquid token go up. I believe silver could run again. Just let the market have some time. Give the market some time, and you'll see. Silver may run again. We'll see about that. But silver. The problem with silver, really briefly, is there's no such thing as like a pure play silver mine. Silver is often an off product or a byproduct of another mine. And actually, pure play is not that easy to find. And so because of that, the supply of silver is much more constrained, from what I understand. I don't own silver. This is an early look into silver for me, but I think silver could be a big deal. And the last one I think could be a big deal is copper. And investing in copper is not that easy. If you look a lot of ETFs on the commodity over the long run, they actually tend to lose value because they use derivatives to recreate copper. So I think if one were to look at copper, I think this is perhaps one of the best one, which is copper miners. So there are pure play copper miners. And again, in the spirit of investing in the commodity, you don't want to pick and choose winners. And so buying the whole basket, I think, might be a solution. And of course, copper, I know everybody talks about photonics right now, and photonics is supposed to be better for AI. It doesn't change the fact that the demand is so huge that copper is still the king for electricity and industrial development and wiring and cabling. And because we're going to develop so much electrical infrastructure, I don't see a world where copper is not in much higher demand going forward. So if I were to think of two commodities that are not too related to the macro and central bank environment, who could benefit from much greater demand from AI, and that are old world commodities, that would be silver and that would be copper. And my proxies would be the iShares Silver Trust and the Copper Miners ETF. There's multiple ones, but that's one I like right here. On the other hand, of course, as you know on this channel, I do believe Bitcoin is a commodity, and I think Bitcoin as a commodity is very much undervalued right now. Very much undervalued. Of course, Solana and HYPE, they are also commodities if their protocols become the one chosen by the market. But we don't know yet which protocol the market is going to choose as the network, as the layer 1 blockchain, as the staking network of the world. Who's going to be the staking network of the world? I don't think it's going to be Ethereum. Is it going to be Solana? I think it could. Is it going to be Sui? I don't know. Could HYPE, because it's hyper specialized, could HYPE keep its place in the sun? I think it's possible. But of course, these are more on the edge of risk, and these are closer to stocks, especially if you buy the stock who owns the token. So anyways, these are some ways to get exposure to commodities that, in my view, will likely beat the money supply. But of course, this is not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.